Treasury yields will spike higher, and then the U.S. Treasury, the U.S. government will freeze China's treasuries, the ones that they haven't sold, because don't forget, it's you can't sell like I don't know how much they've got, like 700, 800 billion worth of treasuries all at once. Might be able to do like 50 billion in one day, maybe 100 billion. And then the alarm bells would start ringing at the treasury. So they would freeze that. And then, yeah, gold would explode if they disclose that they actually have more than 30,000, which is probably what they do. The world would be shocked.
MarioInnecco believes the latest surge in gold and silver prices is not a coincidence, but a reflection of deep structural shifts taking place in the global financial system, many of which are being driven by China. He points out that Beijing has been quietly accumulating massive quantities of gold through both official and unofficial channels, while simultaneously reducing exposure to U.S. treasuries. This strategy, he says, signals a deliberate move to hedge against a weakening dollar and prepare for a new monetary order, less dependent on Western control. For China, gold represents stability, independence, and leverage in a system where financial power has long been dominated by the U.S. and its allies. Innecco argues that the West's complacency toward precious metals has allowed China to steadily position itself as a dominant player in the next phase of global finance. While Western investors continue to view gold and silver as mere hedges or short-term trades, China treats them as strategic assets, tools of statecraft that anchors its growing influence in trade, technology, and currency settlement. He notes that the Shanghai Gold Exchange has already begun reshaping global price discovery, slowly pulling the center of gravity away from London and New York. At the same time, Innecco highlights that silver's role in this transition should not be underestimated. Beyond its monetary significance, silver's critical use in solar panels, electronics, and energy technologies aligns perfectly with China's industrial ambitions. As the world moves toward renewable energy and high-tech infrastructure, China's control over both silver supply chains and physical reserves could give it unparalleled leverage over global markets. This dual strategy, dominating the production and accumulation of hard assets, positions China to thrive in a world where tangible resources, not digital promises, define real wealth. Now, let's dive into the clips to hear these insights firsthand. Don't forget to like and share if you find this valuable. Your support helps spread the word.
You just have to look back at 25 years ago when gold was at $250. Look at the average car price, do the ratio, and do it now as well, and you'll see that car prices have collapsed in terms of gold. But if you just bought gold now, then it doesn't make sense. But if you've had gold for a long time, you might want to think about just why make it difficult? Why borrow money off your gold? I just I'd rather just own the car outright. But maybe you should ask Miles Franklin. They are my North American affiliates, Miles Franklin. In the UK, it's Gold Investments. Andrew Brown, I have heard talk of LBMA working hard to address the recent shortage. Do you think that they will? And if so, will the price drop? The LBMA is only an association that, runs. They don't really do the trading. It's more the bullion banks. Yeah, I saw their CEO or whatever, this woman, come out and say that they're monitoring things, but what can they do? Short of, people wanting to ship silver to the UK. And don't forget, silver, even though the price has gone up, it's still really cheap. It's not like shipping gold on a jet. It costs a lot of money, and it might, let's say there's a $3 arbitrage with COMEX, but it costs $3 per ounce to ship it. It's not worth it. So my hope is that they fail and the LBMA will go the way of the dodo bird, because they don't deserve to exist, in my opinion. And this same woman I think back in April, she said, "Oh, there's no chance that there will ever be a squeeze in silver." Well, we've got it. I forgot her name now, but anyway. Dazable, do you think precious metals going up or down? I saw that already. Mario, Robert says, Mario, please tell us how we are going to survive hyperinflation. Well, I had a Star Path Academy. I haven't spoken to him for a while. He's got a good YouTube channel. He grew up in Romania in the 90s. And one thing he said, they didn't have much gold and silver savings in Romania, but he said the people that had gold and silver, they try to keep it, yeah, keep it and not use it because it's a waste. You buy something one day for 1 ounce of gold, and the next day you only need to pay like a tenth of an ounce. So the last thing you want to do is try not to get rid of as much as you can of your gold and silver. You might need to exchange your silver a little bit for basic necessities. But the other thing he said that's really more important is to have a good relationship, not just with your family members, but with your neighbors and your community as a whole so that you help each other out. That's the most important thing, I think. And people always find a way. And I think these junk coins, like a florin or a US quarter or, yeah, dimes, they will come in handy. And even though very few people nowadays, if you showed them like a florin, they wouldn't even know what this coin was here in the UK. But I think they will quickly learn about it because necessity makes you really focus. So yeah, and I think there will be a lot of bartering as well. Frank, thank you for your super chat. What happens if China dumps US Treasuries and discloses their gold holding next week? Yeah, that will be quite explosive. Treasuries, of course, treasury yields will spike higher, and then the US Treasury, the US government will freeze China's treasuries, the ones that they haven't sold, because don't forget, it's you can't sell like I don't know how much they've got, like 700, 800 billion worth of treasuries all at once. Might be able to do like you know 50 billion in one day, maybe 100 billion. And then the alarm bells would start ringing at the treasury. So they would freeze that. And then, yeah, gold would explode if they disclose that they actually have more than 30,000, which is probably what they do. The world would be shocked. Not you guys wouldn't, because we've been talking about this for years. And a lot of good precious metals analysts like Alistair McLeod, Jan Neuenhaus, and Ronan Manley, they've all pointed to the fact that they probably have a lot more than 30,000 tons. Dutch Libertarian says people are stupid until they get creative in hard times. Yeah, I'm not. I don't think they're stupid. They're just ignorant of things because we haven't had a hyperinflation in the U.S. Since the revolution, U.S. revolution, when the Continentals collapsed. So, there's no one alive who's witnessed it, and there's no one alive whose grandparents told them about it either. In Germany, it's different. And here in the UK as well, we haven't really had hyperinflation. We've had high inflation in the 70s. What's your opinion on John Lee, CEO of Clean Tech Vanadium, saying you will have carbon credits in the EU? Well, we already have a carbon futures market. It's a fraud, in my opinion. And I worked as a futures and options broker, and they started pushing these carbon futures back in '05, '07. And the company I work for was kind of involved in that as well. But I haven't, I mean, John Lee is a very common name. I don't know if there's a John Lee that Rafi Farber interviewed a couple of years ago. If it's that one, then yeah, he's got no credibility with me. But I don't really know clean tech vanadium. I think this carbon climate change narrative is gonna go the way of the dodo bird, I hope, because it's just a yeah, it's just another method of the globalists controlling us, basically by taxing the air. That's what it is, and scaring us into into thinking that the world's gonna end.
Innecco also warns that the current paper-based financial system cannot withstand the growing divide between the physical and futures markets. He believes a breaking point is approaching when confidence in paper claims, whether in dollars, bonds, or unallocated metal contracts, will collapse. When that happens, nations and investors will scramble for real metal, forcing a massive repricing of both gold and silver. This reset, he says, won't be triggered by speculation but by necessity, as governments seek assets they can trust in a world increasingly skeptical of debt-based instruments. Ultimately, MarioInnecco envisions a future where gold and silver stand at the heart of a multipolar financial order led by Asia. As the dollar's dominance fades and Western economies struggle with debt, inflation, and political turmoil, nations that hold real assets will emerge as the new centers of stability and power. China's long-term strategy, he argues, has been to prepare for this very moment, a global shift back to sound money and tangible value. In this new era, gold and silver will not merely rise in price, they will redefine what wealth means, bridging the gap between economic survival and sovereignty in a world no longer ruled by paper promises.
I think, I mean, when I started buying gold and silver back in '02, yeah, I only got involved in the miners a few years later. It's just something that you do. I mean, it's like owning a bank, I would say, because the miners produce gold. And I don't think it's a problem producing gold or silver. I don't think because gold and silver are money. And historically, the growth of the gold supply is kept up with population, so I don't have a problem with it. I think the reason why people do it is because they start looking into the precious metals market and they realize that the miners, it's a way of buying gold cheap. It's you don't have to go to a dealer. Indirectly, of course, you don't have to go to a dealer and pay spot plus 2 or 3% premium. You buy a mine or a mining company, and they're able to get gold out of the ground at $1,500 or $1,700. So they're making big profits. I think that's why people do it. But I think he just having physical gold and silver is good enough, in my opinion, even though I have some miners and they've done really well, and I'm going to keep an eye on them. And I think last bull market in the mid 2000s to '08 or 2008, 2011, I had a lot of my pension into the miners. I put it into a self-invested private pension, my pension, my private pension money, and it grew a lot. And I thought I made a mistake. I've always thought that I should have gotten out, and I didn't, and then it all collapsed. But from reading from or listening to people now, it looks like it wasn't, maybe it was partly my fault, but it was also the bad management, the people who were running these mining companies in the last bull market. They abused the cash flow, and then when gold and silver stopped going up, they collapsed. So that's what happened. There's still fear that they might do this again, but hopefully they have learned their lesson. So that's what I'll say about that. Hizia says, Mario, do you expect a big slam down on the metals relatively soon? They've been doing slam downs of late in the last few weeks, but it only seems to last one day at the most. In the past, it used to last a week or a month even. And we recently had that golden week in China Basically, I think from the 1st of October to the 9th, it was closed. And in the past, it's been a good period for the bullion banks in New York and London to really smack down the gold and silver market. I remember many times during beginning of October seeing gold and silver go down, but this time, if anything, it went up. So I think it's getting more and more difficult. That's my answer for you. Yodi says I lost my job on Friday and there's not much work available right now. I'm sorry to hear that, Yodi, and I hope you get back on your feet, or hopefully you've got savings to keep you going until you find something else. And that's something that I'm hearing from people I speak to that because the last non-farm payroll number October 3rd was not published because the non-essential part of the US federal government has been shut down. So the BLS is shut down. So we have to wait until the government reopens to find out. But a lot of private financial institutions have been looking into privately into the jobs market. And I have a feeling that these job numbers are going to be really negative going forward. So I think the Fed is going to be forced to probably cut more aggressively on the 29th of October. And then they have a December 10th meeting as well. So I think that will help precious metals as well. And I think that will keep the dollar from rebounding too much. I don't think the Trump administration and Stephen Mirren, who's an economic advisor, he's also joined the Fed as a governor. I don't think they want to see a very strong dollar. Hi, Silver, what do you think will happen to UK 10-year bond? I mean, in the last year or two, it's been holding steady at very high yield levels. But right now, it seems to have, yeah, support in terms of price. I think in the next year or two, it's going to go higher, the yields, and the bonds, the 10-year yield is going to go down. Uh, un, you hear that the chancellor says she wants to be tough on inflation and spending. She's going to raise taxes on the private sector. She's going to keep pumping money into the bureaucracy or the public sector. And she thinks she can get the economy growing like that. And I think it's going to have the opposite effect. The economy is going to continue to slow down. Jobs are going to continue to be lost. And eventually they'll cave in and they will start spending and printing and running deficits. So I'm not positive at all on the UK government bond market, especially the longer end. Junk Roosevelt dimes best in the USA. I have some Junk Roosevelt dimes. I have some other the Mercury dimes as well. Not that many. I mean, I still here in the UK. I think it's great to get 1 ounce silver Britannias and also junk sterling coins. Junk sterling is like pre 1920. They're 0.925. That's why they're sterling. And then from 1920 to 46, they're like 50% because we debased the currency after World War One. Both those kinds of coins are good if you can find them. And actually, I wanted to talk about that because I went into town this past week to look at junk coins, and I found some. And and I also happened to find some bullion coins, which is unusual because I went more to a numismatic coin dealer, but he had some bullion. We'll look into that. Tony L says Brazil just started buying gold now. Why did they wait until it's all at all-time highs? Could have bought it in the last 50 plus years. Well, they actually bought quite a lot of gold back in 2021. Yeah, back in 2021, they added like they increased their gold holdings by 60% back in 2021. I don't know why they waited till now either.
Looking into the future, MarioInnecco foresees a dramatic transformation in the global monetary landscape. one where gold and silver become the anchors of a new, multipolar financial system. As Western economies grapple with debt crises, de-dollarization, and declining faith in central banks, nations led by China may shift trade settlements and reserves away from the dollar entirely. This would trigger a powerful revaluation of tangible assets, pushing gold well beyond current records and silver into levels unseen in modern history. The West, long reliant on paper wealth and financial engineering, could face a harsh reckoning as real value once again dictates economic power. If this realignment takes shape, it raises a critical question. Are we witnessing the slow collapse of the dollar-based system or the birth of something entirely new? An era where gold and silver define trust, trade, and sovereignty once again? Let me know your thoughts in the comments below. If you found this analysis insightful, don't forget to hit like, share with others who follow the metals market, and subscribe so you never miss future updates on gold, silver, and global economic shifts.